Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 4.01% to 29,790. Ethereum down 8.75% to 2150. We see a lot of red in the crypto market. Many of the big names are down double digits. So what could be causing this sell-off? We know that there's a high degree of correlation between the Nasdaq 100 or the major US indices. There's quite a lot of correlation between all of them actually, and Bitcoin. And what we see is there was elevated fear in the markets, the main markets yesterday. And that was because even though inflation decreased, it didn't decrease as much as was expected. But it's important to bear in mind that we have a lot of support going through this particular zone. What happened to bond prices? They started to normalize. This is really good. This is what we've been looking for. Bond yields starting to normalize. There's still a flight to the DXY, the US dollar currency index, and that continues to go up. And we see a bit of a spike in gold. Gold broke below a support line, and then it's now just coming up to test it. And we can also see that oil was in a bit of an uptrend, had a retracement and a resumption. A lot of people are feeling really bearish on the markets at the moment. So we can see a lot of puts in the market currently. When puts are put into the market, the people that put them there, put the put there, expect to put down the market. Basically, they're expecting lower prices. When calls are very active in the market, it's all about prices going up. So as we see more and more puts come into the market, this is negative sentiment. I cover this off in the CryptoTradingKS Masterclass. We can see that the CPI also came up, and M1, M2 still at the same registered values. And we can see the 10-year and the 5-year break-even inflation rate coming down. And we've seen a big sell-off in the Nasdaq, and the Nasdaq's gravity has pulled Bitcoin down with it. Masterclass students, you'll get my live chart in TM4. When we look at gold and silver, we can see the inverse DXY starting to bottom out. Potentially it's going to go up, and that means that we would anticipate silver and gold going up as well. Looking at the earnings data, we can see 1,326 companies have beat their earnings. That's 70%, and 565 or 30% have missed their earnings. We know that globally, most advanced economies are moving into the expansion phase. This is where inflationary pressures hit. And what we see is increases in interest rates. This is just all part of the business cycle. And it looks like China is starting to come out of contraction, out of recession. This is from Fidelity Institutional. Just to help you out, I put the annual inflation rate here, and you can see the annual inflation rate was increasing and increasing and increasing. This is the first time it's come down. People were expecting it to come down to 8.1. It's actually at 8.3, and that disappointed the market. And we can see from the Wall Street Journal, gasoline prices increased 43.6%. Energy was up 30.3%, used cars and used trucks 22.7%, electricity up 11%. Inflation is hurting people, eroding their purchasing power. And we can see the Nasdaq, the S&P 500 and the Dow rallied in the short term and then just sold off. And you can see a little bit more data here in terms of gasoline. This is 12-month change ending April in the CPI. You can see for all items in energy, gasoline and energy natural gas services were right up in front. And when you look at services, airline fares increased dramatically. For goods, used cars and trucks, new vehicles, you can see that they've increased the most. And for foods, fats and oils, meats, poultry, eggs and fish, and food at home also increased. And when looking at the monthly change in consumer air prices, we can see we had a bit of a dip in the COVID low, and things are getting more and more expensive to fly. A pretty good graphic on this. Gasoline up 43.6% from a year ago. Airfares up 33.3% from a year ago. Used cars and trucks up 22.7%. You can see a lot of people are getting really hurt by inflation. Eggs up 22.6%. Men's suits, sports coats and outerwear up 21.7%. Citrus fruits up 18.6%. It just goes to show you that no sector of the economy has escaped inflationary pressures. And it's a really good particular run through this one. Of course, our focus is on crypto. So where could this sell-off actually lead us? When we do the mathematical analysis of Bitcoin's price action, including all the black swans, we often see that price is caught by this lower red band. The lower red band, you can see the value just up here in red. That's currently 25,800. I just want to give you a bit of a view of how Masterclass students actually mark up their charts. They use what's called the CTKS method, which is a method that I developed to capture exponential price action. We can see that 25,800 here. It's just in the cradle of 3-month support and 1-year support. And we can see a lot of things. When Bitcoin came down, it touched the 1-year support and it bounced. And it's now coming up to test the 6-month support. It's also under a 6-month resistance. It's also under the 3-month resistance level at the moment. But this is a very, very steep and sharp sell-off. What we actually notice when we get these particular sell-offs, they can be of two kinds. They can be of this kind where they come down and repair. And this is quite normal. Or they can be dramatic ones down. Now, when we look at 25,800 and being the confluence of the 1-year and 3-month support, that's a pretty good place to actually catch price if we consider that the markets could keep coming down. We also have 6-month support at around the 20,321 level, but we're not too far away from that red line. Remember, the red line doesn't stop it, it captures it. What do I mean when I say this? This red line captures it, it stops it, but it can go a little bit further down. And this is important to understand. We can get downplay, but generally if it touches this red line, it's just about done. And we've seen that for many, many years. The problem that we face, we've had 5 black swans in a row, and certainly the lunar UST attack didn't help. But I'll get into that a little bit later. When I talk about marking up the charts, you may say, oh Ken, that's pretty simple. I just put all those lines on there and it's all done. Actually, the foundation section is a combination of 35 videos showing how to actually mark up charts. Marking up charts may seem easy, but I can tell you after marking up tens of thousands of charts, it's really nuanced and there's a lot to know. The CTKS method, that method that's at the start of what crypto technical analysts do when they scientifically track investor attention, these are all those videos from the masterclass. This is what is required to mark charts up correctly. And a lot of people think it's really straightforward, but it's not. One thing to keep in mind, we always do the same edge to the same edge. We extend past. We don't try to fit price action like current price action. We just let the charts speak for themselves and we seek confluence. There's a whole lot of things that you need to know about this particular methodology. You also might notice that different lines have different colors. That's just to make them more readable. There's a whole standard behind the CTKS method, and these lines are called KS lines. Okay, let's look into the longs and the shorts. What have we seen recently? The longs are getting really, really happy. They're entering the markets, and also we see the shorts just going for it. Over the past 24 hours, there's been $1 billion in liquidation across 364,415 positions. And when we look at the past 24 hours, about 67% of liquidations were long liquidations. Across the past 12 hours, the long liquidations are dropping about 62%. Across the past 4 hours, it's been nearly 71% short liquidations, and across the past hour, the longs are starting to get liquidated. It's been about 59% short. And what you can see, longs and shorts are always getting liquidated. If you're leverage trading in the market, in the crypto market, especially around this time, I'm really feeling for you, because it's really difficult to leverage trade even when the markets are quite stable. And there's been quite a few people who have basically wiped out their accounts. I say it every day, please don't leverage trade. Leverage trading, even if you're a professional, can wipe you out. There is no such thing as getting rich quick. I know a lot of people try to do it, but it just doesn't work. The only people who get rich quick are the people that you're actually engaging with when you leverage trade. So I would always recommend, please buy at spot. Even if you're substantially down and they're good projects, you can just wait it out. And that brings us to a really, really important point. When we look at the crypto market, it's literally under attack right now. We've seen a lot of attack from the governments and from institutional players, big money players. And what is that all about? Well, institutions and smart money want to buy for the best price, and that's why they play so many financial games. What I try to do is to get you on the right side of those games, at least to make you aware of it. Now, when we look at crypto, crypto is the internet of value. It's the next evolution in the internet. A story that I must share with you because it's really relevant at this time. I owned, ran and operated an internet service provider in 1993. That's about 29 years ago. And when I was doing that, the telecommunications sector and the postal sector, which were basically government entities at that stage, they absolutely opposed and wanted to kill the internet. Right now, people would say, why would they want to kill the internet? The internet is so important. It's made governments so much money, and it's made everybody so much money. But it doesn't matter. That's what governments do. Governments are backward thinking, in the main. Some governments are forward thinking, but the vast majority of government people are backward thinking. They want to stop things. Only a minority is of the approach that innovation actually works. What governments tend to do is protect established industries. And this is just what they do, and we need to accept that fact. So what actually happened here? I want to bring in just something very, very important. When the internet was first developed, we had modems. People used to have a modem, not Wi-Fi, and they had to call up through the phone line. And what the government thought, oh, okay, we're going to bring in time local calls and kill this pesky internet thing off. We're going to make it so unaffordable that no one will ever use the internet. After all, it's just a fad. 29 years later, we know that governments globally absolutely and utterly failed in their endeavor to suppress innovation, which is what they do. I'm not anti-government at all. I've worked with leading governments around the world. I just know what they think and know what they're like. So what is happening now? Why do I bring this up? The internet is the previous version, like Web 1.0, 2.0, and now we have Web 3.0. What is that? It's crypto. Cryptocurrency is the internet of money, the internet of value, Web 3.0. And the government doesn't like it. And who's it affecting this time? It's not affecting the postal communications section. It's affecting the financial segment of the economy. And they're very, very powerful. I need to take you back in time a little bit to actually understand what governs people's behavior when they're trying to protect something. Most people come from a position of scarcity. They think it's either them or someone else. And if they think that way, they're actually rejecting abundance. And we talk about that a lot, especially inside the masterclass. When the Industrial Revolution came out, they created different machines for weaving. The spinning jenny was one of them. And it threatened literally the whole economic system up until the Industrial Revolution, which started around 1760. We had skilled artisans, skilled craftsmen, skilled craftswomen, and what they did, they applied their skill and they made things. But why were they so threatened by this thing, this thing here, these machines? Because unskilled people could operate them and make what they made. Quite a number of people weren't happy with this, and you can understand why. And that actually created a group called the Luddites. And this group of people took their name from Ned Ludd, a weaver from Anstey, near Leicester. So what did these Luddites do? They actually burned the machines. They killed people because they didn't want their jobs to be taken away. It was literally a war against the machines. I spoke about the spinning jenny. There's a picture of it. That's actually one of the inventions that started the Industrial Revolution in 1764. Why do I bring up Luddite? Because it's a term used to describe somebody who is resistant to new technologies, and governments are the best Luddites out there. Some governments are very forward-thinking, but most are very Luddite in their thinking. The other reason that I bring up the term Luddite is Treasury Secretary Janet Yellen is still calling for stablecoin legislation by the end of the year. She's specifically called out Terra USD or UST, and you would have noted from price action that occurred yesterday, UST depegged. Janet Yellen presides over the Financial Stability Oversight Council, and that's part of the President's Working Group and doing the report on stablecoins. So basically, the US government wants to have the US dollar dominating world trade, and there's many reasons for that, and I don't think they're bad reasons either. But the concept is an algorithmic stablecoin that does not and is not backed by the US dollar presents a clear and present danger to the dominance of the US dollar. And of course, the easiest thing for any government to do is just kill a new innovation. And we see that time and time again through history. And as my background as an inventor, I've seen it so many times. It's just staggering. So actually, what happened to the stablecoin UST? There's a lot of chatter on Twitter, and it's really interesting. I would suggest that it's all a rumor at the moment. I'll get into the facts in terms of the stats that we can look at, but it really happened quickly, and only big players could have done it. I'd really like to point something out before I talk about Charles Hoskins and what he suggested. This particular tweet, keep the peg, isn't about UST or Luna. It's about Bitcoin, and it's about crypto, everything, ETH, Doge, every single cryptocurrency, because you know that no alt can escape Bitcoin's gravity. When you see Bitcoin coming down by a lot, your alts are going to bleed much more. This wasn't an attack on UST. It was a centralized attack on the decentralized economy. I think that really captures what happened here. Forget tribalism. Forget my level 1 is better than your level 1. We are all the peg. That's really good, and people should band together and think in that direction. I was really horrified to look at a couple of retail influencers out there, and they have literally millions of people following them combined, and they were all saying, oh my goodness, it's all over, you should just sell, I'm so sorry, this is such bad news. It's not bad news. I'm not talking about Luna, I'm talking about the market. The market is always cycling up and down. That's like saying the COVID-19 crash, when you could have made the most money ever, that was a bad thing. If you know how to trade inside the markets and you know how to move in and out of positions, that was an absolute guaranteed way to make money. And what's happening here, all the retail influencers are forcing people down a mindset where they panic, where they do bank runs. And I'm going to come to that point in a second, because it's really important to separate your mind from these people. Potentially, the best way I could explain it, when prices were selling down here, all the retail influencers were saying it's going to go to zero. And what happened? It reversed back and actually made a higher high. What we're seeing here is a bounce off 1 year support. There's a large probability that actually things rally from here and people get caught on the wrong side of the percentage. There's no certainty in financial markets as to what will happen. But what we actually do know, many people were calling for the end of the world around here. It didn't happen. And when things turned around, they said, oh, why didn't I buy the bottom? If people are not in this particular price action, they're certainly not going to be in there. And we understand that getting on the right side of the percentage is the key thing to do. For example, we're only about 12% away from that absolute capitulation level, and even if we come up and just retest this particular area, that's a 47.26% increase. Remember that video that we've been showing quite a bit recently? What we see as the markets are coming up, everybody gets so happy. Look, very happy faces, and that's no wonder. And when it comes down, they run. And that's exactly the time when smart money enters and is buying. In fact, they buy all the way down because they're lowering the average buy price. And isn't that what people talk about all the time with dollar cost averaging? I don't understand. Retail influencers, they just cost people so much money, and then people come back up just as it's about to roll over again. It's really important to get out of this fear cycle. And that's why I'm always informing people, if you're feeling these kind of feelings, thrill, euphoria, but now it's of course anxiety, panic, capitulation, a massive amount of anger, you're getting caught in a retail mindset. And that's a horrible place to be because it's really hard to sleep at night. And all of us have gone through it. Anybody that says they haven't gone through this process is just kidding themselves. When you're in the markets for a long time, all this emotion is burnt out of you, and it can take quite a time. That's why I put the CryptoTradingKS Masterclass together to help you to see a better way of doing things as smart money. And you can see so few people can disconnect from their emotional state. You don't get into any kind of anger. You just maintain your composure, and you understand that there is a lot of rules that you need to abide by, and you understand percentages and correlations and all sorts of things that other people just don't understand. So why do all these people abandon ship? The media tells them to, and the retail influencers out there tell them to, and I saw it yesterday, and it was just such a saddening state to see really good people, very decent people, but with a retail mindset saying, abandon ship, abandon all hope, everything is lost. This is what financial markets do, and this is the absolute best time to be in a market. Charles says some really good things. 7 hours ago, Charles said the rumors floating around about how Luna collapsed so quickly all converge to the same reality that every DeFi protocol and cryptocurrency faces. There is a massive attack surface from hackers to traders. If there is an exploit, then someone will find it and break it. There's been a bit of information floating around that basically two very large groups, and this is not confirmed, so we can't say that this is the fact. It will take a while for things to actually play out, but some large player borrowed 100,000 Bitcoin. You have to be really large to do that. That's not something like our community could just get together and say, $4 billion worth of Bitcoin, please. And so the concept goes that they borrowed this from somewhere. Gemini came back and said they didn't borrow it from us, but a lot of people have said Gemini's response was very opaque. They're not sure if there's a whole lot of stuff to this. So they swapped 25,000 of that Bitcoin into UST, and this was done quietly and in anticipation of the attack. When the time was right, they called up Mr. Kwon at Terra Foundation, and they said they wanted to sell this 25,000. as it was a large trade and they told him they didn't want to move the market, so this large block was discounted for UST. And so supposedly Do Kwon took the bait. He gave them a huge chunk of UST. Now the problem in doing this is UST is actually one of a stable coin that operates on the Curve Finance 4 pool, and we actually look at this. Maybe I'll show you the Curve 3 pool. So when we look at 3 pool, we can see there's $1.6 billion worth of UST here. USDC about 157.6 million, and DAI about 168 million. And then when we look at 4 pool, we can see something really tiny. USDC 60,000, 61,000, not million, thousand, 62,000 USDT, and $1 million UST. So when they take a large chunk out, around $750,000 to $750,000 plus of UST, it drains the pool of liquidity. And what happened when the pool got drained of liquidity? It's quite a few steps, but you can see the Luna circulating supply, because it's an algorithmically based stablecoin, it just shot up. And this increase in supply from about 343 million up to 1.52 billion actually tanked the price of Luna. And what has happened since to UST? If we look at it, UST came down hard, just a little over 20 cents, but then it recovered back to nearly 80 cents, and now it's just wobbling around a bit. But are the other stable coins that are backed by collateralized stable coins, how are they doing? Tether, we can see, is coming down. It's not maintaining its dollar peg. And what about USDC? Well, it spiked, and it spiked really hard, almost up to $4. What about BUSD? BUSD spiked as well. You can see that when there are crashes, all sorts of things happen inside the markets. And I've seen this through witnessing so many crashes. The system breaks. And it breaks not just in crypto, but everywhere. It breaks in the traditional markets all the time. And I'm sure many people have stories inside our community of systems actually breaking in the stock market. They do all the time when there's volatility. But the important part to note is UST is recovering. It's on its way back. And I'll just go through a couple more key points so you can understand more about what the liquidity means. So at that point, whoever it was, but they had to have a lot of money, dumped all of the Bitcoin and UST. So we're talking 100,000 Bitcoin worth of Bitcoin, 75,000 Bitcoin and 25,000 Bitcoin worth of UST, causing massive slippage and triggering a cascade of forced selling in both assets. And we also saw Anchor Protocol, which holds a lot of Luna, come crashing down, and it definitely did. And this would cause a crash, trigger more withdrawals than Anchor could repay. From the white paper, Anchor holds basically the UST stablecoin, and it's got bonded Atom, bonded Luna, bonded ETH, and bonded DOT. We can also see that Luna's price came crashing down, and Anchor's price did the same. It came crashing down as well. And you can see the deposits and the borrows in UST. They were started in Anchor, deposits of about $14 billion, coming down to about 4.4. That's quite a drop. And the borrowed about 3 billion, dropping down to 256 million. It certainly hit the market. There's a whole lot of moving parts in this, but I'll just try and summarize it this way because I think it's better. So an unknown, very wealthy entity or entities borrowed 100,000 Bitcoin. It sold 25,000 of those Bitcoin to buy UST. It lowered the UST liquidity. Then there was an absolute bot attack, and the retail influencers got in there and said it's the end of the world. Luna's causing the market to crash. And that's not the case. What actually happened? Well, it didn't help, of course, but it didn't cause the market to crash. If it caused the market to crash, we could see very specific signs, and we don't see those as crypto technical analysts. If, for example, the main markets were going up and Bitcoin sold off, and this was the key piece of news, as we would determine through our discovery process, okay, that's fair. But actually Bitcoin tanked, and I believe these attackers were waiting for the NASDAQ and the major indices to sell off. It was just the perfect firestorm. So we had all sorts of things happening, and they were shorting Luna. They depegged, and you understand for pool now, Binance. They dumped UST on Binance, and Binance temporarily restricted UST and also some other cryptos to try and bring things back into alignment. Anchor Protocol, you understand that. Then they dumped their 75,000 Bitcoin, forcing the prices down. Dao Quan tried to actually stop the UST from depegging, but he couldn't. And what happened was that this entity or these entities bought back the 100,000 Bitcoin at lower prices and made an absolute massive killing. Meanwhile, in government on May the 9th, the Financial Stability Report came out, and there was a whole area talking about stablecoins. Looking into the Financial Stability Report from May 2022 from the Board of Governors of the Federal Reserve System, in their vulnerability assessment of May 2022, they call out funding risks. Structural vulnerabilities persist at money market funds and some other mutual funds, and the rapidly growing stablecoin sector is vulnerable to runs. And wow, we got one just a couple of days after this report. The really interesting thing about runs, about bank runs, if you think what a bank run is, bank runs happen when people go to the bank and they say, I want my money back. I don't trust you, bank. I need my money and I need it now. And the banks simply do not have the money to give. And back in 2020, only 7% of the money supply was actually physical. So if 100 people went to a bank a couple of years ago, and you know how much money has been printed in between, only 7 out of every 100 could get their money. That's why often if you go into the bank and you want anything substantial, they'll say, come back in a week. We need the time to collect the money. This is exactly why central bank digital currencies are coming into the fore, because they can infinitely print money and they can never have a bank run. They know the problem that they're in and they're trying to solve it as best as they can. So when they talk about bank runs, it's really important to understand what a bank run is. If everybody in a specific country went to the bank at the same time and said, I want my money, you can see probably only 3 out of every 100 or maybe even less would get their money. And you can be assured that the person or the people in control, the wealthy, would get it first. So what absolutely starts a bank run? It's fear and terror. And we saw lots of fear and lots of terror in the market yesterday. And all the gaping mouth, skull and crossbones, atomic bombs blowing up, thumbnails on YouTube didn't help anyone. I believe we'd have a much more stable market if people absolutely knew the rules of the market to get the percentage on the right side of them, not to keep on buying on green, but to buy on red. But you need the knowledge. One thing, when we look at Tether, USDC and BUSD, the top 3 stable coins, they're collateralized. They're not algorithmic. That means Tether holds a percentage of its reserves in US dollars, as does USDC, as does BUSD. This is quite good for the government because the government says, okay, you're taking our currency. This is not bad. This allows the dollar to dominate. But algorithmic stablecoins are something a little bit different. With an algorithmic stablecoin, you're using decentralized collateralization, and the problem with Luna was it was under collateralized. And I'm sure that Mr. Kwan is going to fix that as soon as possible. When the Federal Reserve Bank of New York surveyed people, it actually wanted to understand what were the most critical potential risks over the next 12 to 18 months. That was in spring 2022. The Russian invasion of Ukraine was number one, with the majority of respondents saying that's the problem. Persistent inflation, monetary tightening, that's a second one. Risk asset valuations, correction. Foreign divestment of US assets. Higher energy prices. Corporate credit stress, elevated inflation regime, now we're getting into it, cyber attacks, now we're getting out of it, US-China tensions, COVID-19 variant, central counterparty exchange distress, now we're getting back to it, cryptocurrencies and stable coins. You can see how low this plays in the agenda, but if you read the press, it would be like, no, it's number one. Stable coins are just going to destroy the world. And that could have been because of fall 2021, the potential risks over the next 12 to 18 months. We see stable coins was just the 1, 2, 3, 4, 5th ranking spot behind US-China tensions, China regulatory property risks, and this was the Evergrande saga, COVID-19, persistent inflation. You can see how things change around. What this actually tells us is the cryptocurrency stablecoin is, in terms of a potential risk to financial stability, falling down the list of major concerns. There's so many above this. In fact, stablecoins have fallen to 12th position from 5th position. There was no doubt in my mind at all that there was a coordinated attack against Luna. And actually, Ran says buying Luna now is the best risk-reward trade I've seen in a long time. There's a chance that this goes to zero, but if it doesn't, you may pick up tokens at crazy prices. It's an all or nothing trade, but I think it's a smart one. But what do we always do? Every single day, we think about what we will do if price continues to fall, if it goes up or it goes sideways, and you always have your strategy. And this is really important. It's not a buying strategy, it's also a holding strategy. What will you do if your portfolio comes down, for example, and hits that red line? For example, if it comes down about 12%, to 25,800, that's not a very long way off. But what would happen if actually prices rallied up 50%? What would you do then? About 19 hours ago in the last video, I said buying Luna right now is like being a professional skier attempting a triple diamond black run. Further downside could occur and patience could well be required for things to reverse. And it's not surprising that Charles from ADA is getting into talking about protecting algorithmic stablecoins because he wants one as well. And the crypto market is the smartest market on the planet. It's filled with incredibly talented people who will fix this problem. And I do believe we're all in this problem. I wanted to share a particular trade. One beloved community member reached out to me and shared their trade with me. They bought at these levels down and they sold 50% of their stake in Luna at $268. What they actually did, they're now in profit from $500, $519.35. They've actually made a profit of $94.48. Because this is still an open trade, I'm not going to do any percentage, but I have another one to share with you. This is a really interesting thing. Because the cost has been covered, this particular trade can effectively just ride. It doesn't need to be sold at any particular point. And if we see that actually UST starts to go up again, what we would imagine is that Luna must follow suit. They need to burn that excess supply. Remember what we were looking at before. Burning lunar circulating supply down will actually restore Lunar's price. And this spike was only occurring because of what happened to UST. We would expect some normalization. Another beloved community member shared this trade that they made in the past 24 hours. Basically, what we see is, I've just put all the calculations in here. So they bought at $2.90, 342.632 wrap lunar, and that's for a total of 993.63 cents. So that's what goes into the invested amount. And then these particular sell levels, you can see their sells, they are $730 worth and $665.19 worth, which is $1395.36. So we put that into the returned amount. So you can see they made a $400 return, which was a 40% increase just within literally hours. And this is what we do inside the CTKS community. We know how to actually work with these angles. And we're always focused on understanding that many people want to buy the bottom, but when they get in, they would steer very clear of this because they would want to see things turn around. That can trap people on the wrong side of the percentage. And what you can see, you don't have to actually stay in the market very long to make a really decent return. And what you can also see here, this beloved community member put a purchase in, and as soon as it was filled, had levels out, and that is what we do. And in crypto, price is always imploding, exploding, imploding, exploding. Something else I'd also like to show you, if we look at this particular price action, so we passed over the previous all-time high from the 2016 halving cycle. We made a top and then came back, made a higher top and then came back. I've just literally copied that price action to the previous cycle and matched it up pretty much according to what it was doing. And you can see that we've missed that blow off top. Why did we miss it? Because of black swan after black swan after black swan. We had our plates full of black swans in this halving cycle. Now, what do we actually think about the other side? Because we didn't have an overstretched price, the chance and probability that it will come down 85% and capitulate is actually very small, because we haven't had that opportunity to get up so high, so fast, so far that it comes down wildly. This could actually mean that we may be close to the bottom now. And that's something that you should put on your radar. I'm not saying we're at the bottom. I'm saying I believe we are close. And another thing you may want to keep in mind is the RSI. Whenever it reaches these kind of levels, it actually signifies quite an interesting opportunity inside the market. Not always, but often. And what we can tell, the markets have been going through massive retracements for quite a few weeks, actually longer in terms of duration than we've seen ever. And if that's the case, we would expect to price to move in a wave and do a positive wave up. It's just a natural part of the market's momentum. There's a lot of tribalism inside the crypto market. A lot of people say this coin is good, that coin is bad. I don't think there are literally any bad projects. I think they're all proven or not yet proven. I think the crypto is in its very early days. And what this particular person says is really important. Forget that my crypto is better than your crypto. We are all in this together. And yes, there are powerful forces out there that want to put a stop to things. But do you really think that they want to put a stop to it? Let's just think about that for 1 second. Fidelity greenlit the concept that 20% of retirement funds could be put in crypto, and they're just creating a bonanza opportunity to get in at lower prices. Many people would have thought they couldn't see a price like Bitcoin at the moment, 28,771. and the institutions are looking at it, licking their lips, and they're saying, wow, this is what they want. And they had a way to get in. They had a way to cause panic. And that's kind of what they do. This is just the natural evolution of markets maturing. This wasn't an attack on UST, and it wasn't an attack on Luna. It was a centralized attack on a decentralized economy. And if we go from that perspective and we understand that they're attacking it because they want in, that's why I showed you my experience with the internet. There's nothing different with crypto. They're doing the same games. And being around for so long and being in the markets for so long, I've seen lots and lots of games play out. This is just another game. A lot of people, when they enter the market, they're stuck in the panic zone and the blame zone. That's because they want certainty. They want to be correct. The markets don't allow you to be correct. They allow you to have probability and to have patience and rules and courage. When people engage in Zone 1 and Zone 2, it's a lot of sleepless nights and a lot of needless stress. Some people say, and all of us have been through it, these are the 4 stages that all investors and traders progress through. So all of us have started in the panic and blame zone. It's just a recipe to lose money, so you don't want to do that. Knowing that we can have a better life and a better way with patience and rules, and with meaning and mastering fear, and through positive excellence, just turning up day after day, even if you don't want to. A lot of people get into a losing position and they say, I need to get rid of this position. It shows that I didn't do something right. You didn't do anything wrong. It's the markets. The markets do these things to all of us. It's not anything other than normal operation. But if you can get to the other side, if you can stand strong, if you say, okay, what did I learn from this? How do I do this better next time? You're getting into Zone 3. And when you master fear and you don't care about what other people say, you become independent. You're in Zone 4. And that is exactly the place that you want to be in. Also, a trademark of Zone 1 and Zone 2 is Rule 56. They actually do the inverse of this rule. They seek tops and seek bottoms. We don't, as professionals. We just use probability, and we don't care about tops or bottoms because we care about participating, just like that trade I showed you earlier, those 2 trades I showed you earlier. And we don't want to be like these people. They run away from the market just in exactly the time that they should be in the market. And this actually happens because people don't want to be wrong. They said, I bought something at $10, it went to $5, I need to get rid of it, I'm wrong. You're not wrong. This is what the institutions do. Institutions, smart money, they're always doing tricks like this. They force people out of the market so that they can buy back in very quietly. And there's no one on the floor except the invisible institutions, invisible smart money. I would love you to think like that because this is the absolute best time to get in. Be really careful of the advice that you seek out from retail influencers. And you can tell them really quickly, they're full of emotion. They want you to get caught up in that hype cycle. And I think it's just because they want more views on their channel. Some of these people are really, really good people, but I think they're just have the wrong focus. If we can get rid of emotion in the crypto industry, there's already so much turbulence built into price already. That is the way to go. It takes a lot of time and practice to get your psychology set to profitability, and that's why Rule 570 is really important. If you ride the emotional roller coaster, you will lose money. And it's unfortunate because people are taught to ride that emotional roller coaster. They're taught to buy the bottom and to sell the top. So they get all this incredible stress. They're taught that they can't make money unless they leverage up as much as they can. They're taught so many different things. But in truth, take it slowly and you'll do really, really well. Crypto is here to stay. It's a profession. and an industry that will last for decades and decades and decades and will grow just like the internet did. After all, that's all it is. It's the next version of the internet. And a lot of people are hurting right now, so Rule 219 is really important. Be kind to yourself. Just forgive yourself. You may have lost money on paper, or you may have book losses. That is okay. That's all part of the learning process. But please be kind to yourself. And in the process, please be kind to others. Other people deserve your kindness too. I hope you found the content useful. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.